Okay, welcome everybody to this evening's XAUUSD Securities webinar. My name is Duncan Cooper. So tonight's webinar is live Forex market review, so we'll be getting into that momentarily. Before we do, if you can read through the disclaimer, that would be great. For those on our YouTube live stream, I cannot see the chat, but I've given you a link so that you can join us if you want to talk to us, or you can just watch on YouTube. For those in the webinar, you can use the webinar chat box or the Q&A box to talk to me. So I'll just give you a moment or two to read through the disclaimer before we move along. Right, we'll move along now. If you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at XAUUSD Securities. And I'm a full-time trader. Been trading Forex now for more than 15 years, almost 20, and been mentoring for more than 10. If you want to contact me, my email's there, duncan.cooper@acy.com. You can connect with us through the week at our website. Go to acy.com, go to the market news tab, or our YouTube channel at XAUUSD Securities Australia, or if you want to connect with me personally, just head over to my Linktree page and you'll find my links there. If you want to get access to the charts I'm using in MT4, just contact Nathan.bray. He'll be able to organize that for you. I can put his contact details in the chat for you. There you go. All right, let's get into the news events for the day. Now, it's a highly volatile week with news. We've got the US CPI data yesterday, PPI data today. I've got the Eurozone interest rate decision today. So here we are, if you follow my mouse arrow. These times are my time, 10:15 p.m. Queensland and New South Wales time. So 10:15 tonight, we have the Eurozone main refinancing rate, monetary policy statements, no expectation of change there. And then we also have at 10:45 p.m. the ECB press conference. And from the US, we've got the core PPI data coming out and unemployment claims at 10:30 p.m. Now, yesterday, the CPI data upticked a bit more than expected. Saw a very strong sell-off of pairs to the US dollar. So the US dollar appreciated quite strongly across the board. And it's generally speaking still doing that. So they're probably expecting that as this has risen, the PPI data will have done the same. All right, so be very aware of this highly volatile data. We've got the Eurozone as well coming out. They might be a bit more dovish in their talk. So we'll have to wait and see. That could well further fuel the euro dollar moving down. And then tomorrow we have early morning, 3:01 a.m., the US 30-year bond auction. Tomorrow, 4 p.m. for the UK pound, GDP month to month. And then midnight tomorrow into Saturday morning, US prelim, Euro and consumer sentiment. So that's all the data left for the week. All right, but just be aware of, from 10:15 p.m. probably to around about maybe 11:15, it's going to be highly volatile in that window, that 1 hour window. All right, so this is the dollar index day chart. You can see we've had a very strong bounce up yesterday to a fresh high. Was looking a little bit downward here on the daily. It was just a pullback of maybe 1.5 weeks. Hasn't changed the trend, that pullback. The weekly trend was already up. It was just pausing and it's gone to a fresh high. So next level to watch as an area to bounce from, 105.69 at the moment on the weekly chart there, the dollar index. So, and there's an imbalance over here to the left that we're coming into now as well. So we might see this pause a little bit up here at 105.69, but it's in an uptrend. I'm expecting continuation until data presents, negative for the US. What the data did yesterday was probably, shelve the idea of maybe a June cut in interest rates from the Fed. Well, we'll have to wait and see how the data keeps coming out, but it's not really added fuel to the fire for a cut now in June. maybe we won't get a cut all year. We'll have to wait and see. What, if we're not going to get a cut all year, that's really maybe fueling the tone of the US dollar to move further up. S&P 500 had the opposite move yesterday. It's not changed the longer term trend, but the day chart trend is down here at the moment. And I've been saying now for quite a while on the weekly chart, we're overextended. And it would, in a perfect world, it'd be nice to come back down to the area that we broke above, the all-time high that was back here at 48.16. So there may be the opportunity to get short to move down that way. Personally, I don't know if we can get down to 48.16, but if we can, that would be a great area to look to be, getting support for the next long-term, maybe the long-term move up. All right, so currently, if you are trading to the downside, we've had a rally of sorts. In fact, we had a rally from there up and then down, and then actual fib would be from that high to low, which gets a bit messy. So let's drop to the 4-hour chart. All right, that was a drop. I actually said that on Tuesday. Watch this 79% area up here, and so this may be coming down to say the 127 extension, and then we may well then see, the next rally. So we've been down, rally to 79. We're going to move through to 127, and then see another corrective move up, and then down. So we're kind of in the profit taking area if we're using the fib tool. Might want to wait for the next rally to occur before looking to short that at the moment. All right. All right, let's move into the euro dollar. Euro dollar. All right, day chart. Of the range from last month's high down to the new low of April, we've had a 62% retracement. I would discuss that on Tuesday, that we may well come back to that level to fill an imbalance to the 4-hour chart, to fill this imbalance here on the 4-hour chart. Pretty much came into the perfect area that I highlighted. Had a nice reversal there on the 4-hour chart, and 108.65 yesterday is this day chart area of resistance. So we popped above, rejected it on what was Tuesday. Wednesday, that was the high on a rally, and of course we moved down. So the question is, can we continue down in the same vein and move below 106.94 over here? Because I have also been saying, on the day chart that that was last month's sell. We'll probably get a rally down to 127 extension. And on the bigger move, we've got this move, that rally to there, and then this overall larger move down. So I'm expecting to move, down through 106.94. Might need a bounce. We had a long day down yesterday. Don't know whether we're going to get another massive day down. We could, though, from the Eurozone interest rate decision later in the day, but we're on support at the moment, so it's a bit difficult just to sell into support. It'd be great if you were looking up here prior to the reversal drop yesterday, where I was discussing on Tuesday. All right, so at the moment, there's a large imbalance from the news drop yesterday, so I wouldn't be out of a stretch of imagination to see us come back up the range, but we'll have to wait and see what the news brings. Not wanting to commit below this low area at the moment. Not really, if we move to the 15-minute chart, look at price action, not seeing a lot of strength back up the range at the moment, but just back to the 4-hour, there's the 4-hour range. Then to the 15. Don't know whether we can get up to the 62% level or 79% level for a rally. In a very weak pair, this is weak at the moment to the downside, we often won't get past the central pivot point. So the central pivot point is here at 107.78. So we may not get above there if we can get up there today, but that's certainly a level worth watching for some kind of volatility rally in the day, or even up to 108. But if you're looking to get short, then you'd want to see a rally. Now, you might think this is a great buy area. So today we could spike into 107.24, and then we could hold. If we can't move below that level, then you could look for an opportunity to trade up. And yes, there's this imbalance here that needs to be filled. So it's not out of a stretch of imagination at the moment that this can't come all the way back up within this range. However, there was a very clear tone that inflation may be growing again from the US, and that's for US dollar strength positive, from the US side. So I'd be much more inclined to just wait for some form of rally and a failure, and then can we see an opportunity to sell? All right, in line with the tone that came from yesterday. So I would just be looking on the 50-minute chart at the moment to the central pivot point, 107.78 up to 10800. All right, Euro Yen. Just to go to the day chart here. Just tidy a few things off. All right, so the day chart struggling up here. This is how I had my fib drawn in on Tuesday, kind of topping out a little bit here at 79%. And couldn't hold above that day chart 164.90. Couldn't challenge the high form 2 or 3 weeks ago at 165.34. So it may be on its way back down the range from this low up to high at the moment. We'll have to wait and see. There's lots of support levels that the market needs to move through if we are moving down. But at the moment, we could still be moving up. I'm just noting that we're failing at that 79% area. So are we failing at the 79% level? Of course, the Eurozone news today will confirm, but have we failed up here to go this way, back down the range from low to high here? Okay. And then of that range from a low to high, we may get some form of support. And, if you draw a fib in here, across that range, we may well come maybe down into the 62, 79% zone of this range before then maybe moving back up. So let me try and get rid of all my drawings. All right, so the big question at the moment is this high over here. That's where we're getting some form of support, 164.29. That's a weekly high. We see we spiked below yesterday, but we're obviously holding on top of that level, and we're failing at this level up here. So there's a bit of a range here at the moment, holding at the 164.29 level for support, and resistance up here at 164.90. Structurally here on the 4-hour chart, you can see that we are lower top, lower bottom. Just want to drag this fib out of the way. So we'll look, we have been rolling back up within this range. My 15-minute chart here. Haven't been able to get up to the 79 with the volatility later in the day. There's this whole imbalance here that could get filled. The majority of it's been filled, but there's still an area up here. So that would be this area here. Can we just come up and fill the whole imbalance? So I would watch slightly above the 79% level. Maybe price can get just above there, but then do we start to hold and turn around? That's at 164.75. To continue and move back down in line with the 4-hour collapse that we had yesterday evening. Okay. Maybe it can't get up there. It's already starting to sell off a little bit now, but no point just getting short in the face of the Eurozone interest rate decision. It's a little bit risky, but I'd certainly be watching up here at 164.75, even up to 164.90. That would be a 15 pip range up there. Euro pound, for those interested in, very range bound. It's really stuck between, that's weekly support here over to the left, and daily resistance here. And we're kind of right in the middle of that area. We move it to the 4-hour chart, we've turned to a downtrend, so you could be watching the current range. We've maybe held at 62, but the 79% level overlaps perfectly with the daily resistance level at 85.75. So I would look, to trade down within the 4-hour trend here. Can it get up to the 79? Hold, fail. Can you see set up to sell to move down? Could have already failed at 62% level, but if I was looking for an opportunity today, I would look up there at the 85.75 level. All right, let's get into the pound dollar. Big collapse yesterday. So here's a day chart. And came up to the 62% level of this high-low range earlier in the week on Tuesday. I also tagged it yesterday. And we're trying to ask the question of, can we break down through these areas of support? Personally, I'm just going to the weekly chart. I think that we may have topped out at the 79% level of this range. Got a 1 or 2 pips short there last month, then rejected all the way down from that level all month. So are we long term going to be putting in some kind of movement like that? So if we are, we need to break these areas of support. So we will have to wait and see if we can break through, but we're having quite a big outside week this week. We've traded up at the early part of the week, and now we're actually below the low of last week. So that's what I'm thinking, maybe panning out over the next few months. Day chart. Looking at the moment, so that's 62% retracement of that range there. Thinking we're coming down maybe to this 127 extension at 124.67 area. That would obviously take us through these areas of support. And from the movement back up here from 2023, there's an imbalance here that we've not filled. So we could well be over the next month or two wanting to come down and fill this imbalance to move down. We'll have to wait and see. All right, to the 4-hour chart, big collapse. How much are we going to rally back up? We've already kind of rejected this area here, fraction short. That's last month's low at 125.75. So depending on what the news brings from the US today, I think the level to watch is this last month's low area for a rally point. And of course, support's down here. Last week's low, 125.38. There's then further support at 125.35 and 125.18. So those lower levels are from the weekly chart. You can these low areas on the day chart here. This is a weekly level here. So there's an area of support here that we really need to break if we're going to continue further down. Now we may trade into it, but we may, want to bounce back up. So if you wanted to get short, I would look at 125.75 area. If we hold there, can you see a setup to sell intraday? And if we can't break below 125.18 as we trade down, then you may need a cover because we may well bounce back up from that area. So those are the areas to watch for support and resistance. Just want to drop to the 15. Of course, we could reclaim all this drop at some point. So we could just come back up the range. So you watch the 62.79% levels. But at the moment, we can't get to the central pivot point, and we can't even get to the broken level of last month's low at 125.75. So that would be the area to watch at the moment, I think. Last month's low up to the central pivot point today. Central pivot point is at 125.88. So 125.75 to 125.88 to sell in line with the trend that we've been seeing. But we've already moved up in London and we're already selling down. So we're getting close to support now. So I'm not going to sell so close to support. I'm actually short from above 12700 anyway, so I'm not personally looking to further shorts. But if you're looking to get short, this would be the area that I would watch. Pound yen. This high here, 192.24, is the focal point. We moved above, became support, up to 79% level. Bit of a double top there on my 4-hour chart across this larger range. And are we, was support in here? Is it now flipped to resistance? We're actually below it at the moment. Drop to 15. We've actually come up within the drop of the last day's trading. A bit short of the 79. May have already topped for the day. There's still a bit of an imbalance that hasn't been filled, so we may come up a little bit higher later in the day. That would be the area to watch. So the 79% level, 192.59, up to 192.71. If we can get there, we may have already topped. If we continue down, then over the next 24 hours, you may want to start to watch 192.24 to be resistance. All right. So the question is, does this have any more upward move at the moment? Can we get up to the 79% level before then moving down? So I'll go to the data chart. I just need to take those off. The data chart, if we are staying up here at the 79% level, looks very similar to what we're seeing on the Euro Yen. We could be moving down to 189.09 at 127 extension, and there's an area of support through here. So we could be moving down towards that area if we can start to hold and break below this 192.24 area. All right, so can we get up to that smaller 79% level today, or are we already failed there? That would be the area I watched on 15. Okay, Aussie Yen, just sticking right at 100 at the moment. So on the day chart, still in an uptrend theoretically. Could still want to get back above the areas that it was above on Tuesday. Tuesday was quite happy to start to find support intraday. The low of Tuesday was, sorry, the low of Tuesday came in on this high to the left, 100.16, closing above 139, but then of course dropped straight back below all those levels with yesterday's news. But there is a low here, and that's the higher top. So there's the potential that we've had a 79% retracement here to the 4-hour chart. And, can we hold that uptrend? Not sure we can. At the moment, any rally today is just getting a little bit, it's getting held at the 100 point. Some volatility today could see as the question, this market could go up or down. Heavy sell-off yesterday has had a very strong underlying trend over the last 2, 3, 4 weeks. Are we going to hold this trend, or has that massive imbalance drop yesterday kind of killed that? So we're getting some natural support there at the 79% level. I'd be more inclined maybe to look for an opportunity to sell. What we're definitely finding with the yen pairs, except for the dollar yen, with the US dollar strengthening, pairs to the US dollar weakening, with the yen pairs, so for example, the Aussie US dollar declined strongly and the Aussie yen declined strongly after the news. So dollar yen moved up, but the yen pairs didn't. They went down, favoring the correlation with the counterparts versus the US dollar. So the euro yen went down in line with the euro dollar, pound yen went down in line with the pound dollar. So Aussie yen went down in line with the Aussie dollar moving down. So I would be probably more inclined to think with that correlation bias at the moment that we may well reclaim some of this move down. 62% overlaps with this day chart high over here at 116. If we can get up to that level, that would be a good area to watch today. At the moment, you know, it's perfectly holding at 100, the figure. So the volatility news might get us up to 116. If we want to fill the whole imbalance here, could get us up to the 79% level at 136. All right, and there's a day chart top there at 139. So a few areas to watch. 136 to 39 or 116 here and 62% level. And of course, at the moment, we'll hope, we could simply try and spike above the 100 level and then hold here. So there's actually 3 levels to watch there. Watch your setup to get in. 3 levels that the market could trade at. Currently, at the moment, it's respecting that figure, but imbalances usually get filled, and there was a massive one there, so we'll have to wait to see whether we can. Notably, when we started to create this imbalance here, we rallied back up just to there, and the market hasn't been able to quite get to there. So maybe we can only just get to there today to then decline. We'll have to wait and see. All right. Aussie dollar, not having too much opportunity on my 50-minute chart here to get up to the central pivot point. It's just drop, and now it's waiting for the next news event. All right, so day chart. This is where I said 66.21 to 26 up here, 79% fib, and the range. I was saying the market's really stuck between this area of resistance and this area of support. Now we've actually come down almost to the bottom of the range, and that is a higher top to the previous top, so we could just get rid of, we have failed at that 79% level, trade down. We could be getting support from this 79% level to trade all the way back up. Market's always going to be right, so if you're wanting to get long, you could be looking at the 65.13 level. If we can get back down there today, there's more lows to the left here, which are acting as support. It is going against the intraday bias at the moment after that, the CPI data coming out. So I'd be more inclined, if I wanted to get long, probably to wait to come down to the bottom, because we've got clear support there. I'd want to maybe know that, well, the market still wants to be in a range and hold down here at the bottom, first of all, because the market might want to break below here. If we get another good, robust PPI figure, the US dollar is going to get further stronger, and we'll probably trade down at 64.78 today, and now we're moving down and through. So I'm not sure I really want to go in the face of what's been happening with the inflation data from yesterday. But you could be, if you're more bullish, then you could be watching today for, I'm just going to drop to the 15-minute chart. You could be watching 79% levels at 65.13. You could be watching from 65.13 down to 6,500 for support. If we hold there after the news start to want to come back above, then look for an opportunity to trade up, whatever your setup is. More inclined, though, to think that from the 4-hour chart, we might reclaim some of this drop, but I would look for an opportunity. So it's always very difficult when we got these massive drops, because these are often filled, but sometimes they're not. So I'd be more inclined to see what happens at the central pivot point today at 65.45 after the news comes out. And if we can't get above there with any conviction, that may be where the high of the day comes in. Just at the moment, yesterday, obviously, this says low came in at 65, fraction below. And we're not able yet to find any momentum to have another go down there, but we're more inclined to look for a rally to come to an end and then have enough room to get short for a further retest of the 65 level, okay? And well, as I said, watch the pivot point, central pivot point at 65.45, maybe to be resistance in the high of the day. If you break above that level, then I will start to look at the 62 to 79% area. We could well be heading back up to 66, depending on the news later in the day. All right, New Zealand yen had a lovely failure up here yesterday at this little double top here. This is coming from a lower bottom down here, and there's a 62% area in here from high to low. So are we forming a double top here? If we are, we could be heading down to the height of the pattern. Projected underneath, and that comes in here at 8,800. Don't know whether we are actually forming a double top, but if we are, if we start to move, if we break this low, we are. At the moment, we have a massive reversal down on a day chart from that 92.19 area. Did trade above a little bit after we got the interest rate decision from the Central Bank of New Zealand. And we're just coming back up inside the day of yesterday. So on all these pairs, they'd have had a big drop yesterday. It would be nice for them to have a rally back up. My 4-hour chart here, can we rally back up to the 62 or the 79% level would be ideal. And look for an opportunity to sell. Can we come up to 79% level, even retest 92.19? Look in this area for turnover to see price come down, and are we going to be longer term coming down to test the low that we formed at the start of the month? All right, that's what I'll be looking for there in the New Zealand yen. New Zealand dollar to the day chart. All right, this area that we broke below, we did trade above it on Tuesday and Wednesday. Managed to retrace 50% of this decline after we had the double top. So like I've just been saying on the New Zealand yen, we had this on the New Zealand dollar last month. Then we had a really nice trade down. We broke the midpoint. The midpoint is really where the market now is getting resistance. Okay, that was the midpoint there. So I think this low here now, 60.38, would be a really good level to watch if you can be patient over the next couple of trading days. Can we come up to have a rally after the drop of yesterday? Don't really need that fib in there. All right, 62 level, 60.37, and the broken support pin potential resistance is at 60.38. We could, if we could get a nice rally back up, could see some form of head and shoulder pattern forming in this area here. All right. Because we moved up, came down, moved up, then we've broken that point. We're going to then come up to this point, like so. So predominantly 60.38 overlaps for 62% level. So that's the area I will look for price to rally back to. And then can you see it's set up to sell? Of course, you could be selling at 60.38, stop above this high. Yeah, looking for the continuation of the downtrend long term. That's if we can rally up, you know, get a nice high rally. All right, that's my thoughts on New Zealand dollar. Dollar Canadian, we're breaking out of the range that was. This is how they've had the fib drawn across the day chart. I was looking for this to come down to the 79% level, didn't get there, but now got to the 50%, almost to the 62. And of course, now we popped up to the 127 extension. It's a little bit overextended. I mean, in terms of swings, you know, we move up with the fib tool. I use my other drawing tool. We move up. Didn't quite get to the 62% level. We can see where we got support. And now this is the profit taking area. So I would now be looking for the next pullback, just as to whether we can get a pullback today, as the US dollar is getting so strong in the face of the news that came out yesterday. So I would be monitoring this range at the moment. Keep dragging the fib up, keep moving up, and wait for the next 62.79% pullback to occur. Now, from the day chart perspective, let's get rid of that fib. It may not work to the fib. It may only maybe work to, say, this area here, this broken resistance to be supported at 136.13. All right, this was a clear area of resistance for a long time, broken above. Now, if we do pull back, I would watch 136.13 down to 136.00 intraday to come down. Can you see it's set up to buy here to then trade up? All right, so it may not conform to a fib, but that was clear resistance, and now it's potentially support. Anybody that was short here that's still short will want to buy if we move back to that level to clear their positions, and then that will offer support. Okay, dollar franc is just traded up to on the weekly chart here. Next level of resistance. So not a great area to buy because you're at resistance, but the trend is up. I would just drop to the 4-hour chart and monitor the range. There's the 4-hour range. 62% level actually overlaps with last month's high at 90.70 and 90.84 on the day chart. Or 90.84 is an area from the weekly chart. It's this area over here. It's actually a monthly area that we've broken above. So that would be the area of support that I will be looking for at the moment. 90.84 down to 90.70 to be support if we get a dip. Difficult on a lot of these pairs at the moment. Really, you know, pairs that have US dollar on the left-hand side have moved up, so you don't want to be buy, you know, don't want to be a buy at the top. You want to wait for a pullback if one can come. And pairs versus the US dollar have moved down, so now you'd like to see a rally before you can sell. So, and that's always the case when we get a news item that comes out that we're not expecting. So, game of patience. Don't be buying the top. Look for a pullback. All right, dollar yen has put in another fresh high today. So we were very sideways in here to my day chart. We have broken above the 22 high, the 23 high, 22 highs at the 151.94 level. So we kind of got wedged just underneath 152. And we did come back down to support last week at 150.87, got support. But this breakout is all due to the CPI data. Now, I'm sure the Bodge is watching this very closely. 152.84, if you go to your monthly chart and squash it in, it's a historical high from way back in time. So over here in 86, don't know if that's going to do anything. It was a lower low in the continuation of the downtrend. There's a kind of a final high up at 160.33. So I'm sure the bodge, we're at price points at the moment from 40 years ago, almost just under 40 years ago. So we're at very historical levels at the moment. I'm sure the bodge, if you just move back to the day chart, he's watching price very closely, and they may come in and intervene. Harry is saying from Bloomberg reporting 152 yen is level in Sun for Bank of Japan. Any indication? Yeah, you'll know when they intervene. The only indication you're going to get is that price will just drop. There won't be any indication beforehand. I was actually expecting some intervention yesterday. I wasn't sure whether I saw some on the second 50-minute candle after we went up yesterday. But the bodge won't announce that they're going to intervene. They'll just come in. And I was maybe half expecting for them to come in after the news item yesterday. So on the 50-minute chart yesterday, where we had this spike up, I saw this candle come down very quickly. So I was kind of thinking, is that the central bank intervening? But it couldn't get back below. It pretty much stopped at 152 and then went back up. So if we're going to, we may well see this, over the next 1, 2, 3 trading days come back down the range. I know, at the moment, if we're going to continue up in the vein of the US dollar getting stronger, 152 is potentially now support because it was resistance. But at some point, Central Bank of Japan may just come in and intervene. They don't broadcast it, they just do it. You'll know when they do it because it'll drop maybe 300 pips to 500 pips in 1 or 2 or 3 50-minute candles, but they don't announce. So, it's very dangerous, I think, at the moment, until we see quite clearly maybe this pullback to 152 and hold for a few days. And if we're not getting into any intervention, that's maybe then, the central bank's saying, okay, they don't want to push it below 152 at the moment, but it's very difficult. Now that we're above 152, last year maybe between 150 and 152 is where the bank was starting to come in and intervene. So I'm sure I've already seen some headlines saying that they're watching prices closely, but you're not going to see them declare that they're going to do it before they do it. They just come in and do it. So, if the PPI data comes out today, which pushes this further up again, they may well come in and intervene. Very difficult to trade dollar yen at the moment, though, because fundamentally it's quite clearly now broken into an uptrend above the highs with the US dollar CPI getting stronger. The markets, from a pricing point of view, isn't expecting maybe the US to cut rates anytime soon. So that fundamentally creates a higher price for the dollar yen because of the yield. If we get a policy shift from, the bodge and they want to much more increase their interest rates, then that could be the turning factor. Or they may just don't like the higher price and they come in and intervene. But it's going to be very difficult. It's difficult to be long, but being long is where the trend is because of the interest rate differential. So it's just struggling at yesterday's high. So we may start to see a move it back down to 152. If you're prepared to have a go at getting short, you could be looking for some form of a trend line break. However, you can draw a trend line in here, but we've still got more news coming out. So after the US news, you could watch this maybe for a reversal if you're prepared to, trade in the face of it. And as that reversal comes around, if it does, maybe the bodge might come in and just help it along its way. But fundamentally, it's in an uptrend unless we get a major shift from the Bank of Japan's fundamental stance at the moment, I think. All right. So personally, I would just be leaving that alone at the moment. If this got back below where we've broken above, we could be dealing with a false break. So if we start to hold once more below 151.94, the 2022 high, then, over the next week, we could be dealing with a false break. We'll have to wait and see. All right, gold. It's just trying to hold at the moment on last week's high. This is my 4-hour chart. This is the area that I was discussing on Tuesday, which is kind of where it's sitting. With yesterday's data, though, we may well see this move at least in some form down the range. I think this has been moving up so strongly because the market's been saying, okay, maybe inflation is decreasing in the US. We're going to get interest rate cuts. So that may be not the case at the moment. So this may, want to pull back down the range. But we've only had one negative day. We might get a second negative day at the moment. But in terms of the trend on the day chart, that's the higher bottom just here. So for those trading gold, we may only see, a pullback to the 62.79% zone before we find support to further move up. So trend is still up on the day chart. This is just corrective over maybe 1 or 2 days. So looking at 2304 down to 2288, that's the zone I've just mapped in. That could be where support comes in for a turnaround back up in line with the day chart trend there. Right, so if you're not already in positions at the moment on any instrument, it's difficult because of the strong move yesterday. What I tend to do, if I'm not already in something, I just wait for the next retracement to occur. That might take 1 or 2 days and just have to be patient. I don't have the fear of missing out. This Aussie yen at the moment, if the news doesn't change anything, it is looking a little bit like 100 is starting to be the top. So later in the day after US news, if we spike up to 100 and we start to hold there, selling at 100, stop at 101. If you want to have a long-term opportunity, maybe trade down. That could be an opportunity for you, or look for a tighter entry. Aussie dollar's can't get up to that central pivot point at the moment. I suspect we're moving below 65 on the Aussie. All right, Euro yen. Whilst it could get up there in the volatility of the Eurozone news, at the moment it's not getting up to the 79% level. Euro dollar. It's not got much of a rally in its legs at the moment. Pound dollar. Just sitting on support, waiting for the news. All right. So it's a patience game. Can we get some form of rally? Harry talking to me again. So I'm just reading your long statement. So you're asking me, I'm not sure what you're asking me to prefer. I think fundamentally, with interest rate levels in US and EU, from the US side, maybe the interest rate is going to get delayed in terms of a cut, and maybe it's not going to get cut. I mean, we've had a dip of inflation, but maybe we've bottomed, and we're going to see inflation, move back up. So then maybe the Federal Reserve may have to raise interest rates. So all right. So you're asking me, with interest rates cutting getting delayed, which currencies will be positive and negative? I think I've seen headlines from regarding the euro that they maybe need a cut a couple of times this year, and they may cut before the US. So, and maybe same from the UK. The UK may cut before the US now. It's looking like if we're going to get any cuts, the EU could cut, maybe the UK could cut, and they may well cut before the US. So if we think about those two pairs, that means then we're going to see the euro dollar move down and the pound dollar move down. And, the question here in Australia is, are we going to get a cut from the RBA this year? But if it's looking a little bit like maybe the US isn't going to cut, and we might get some cuts from maybe Australia, the Eurozone, the UK. So, maybe the euro dollar and the pound dollar are going to, see strong moves down, especially if the US dollar, the US inflation side remains robust. All right. Aussie at the moment, I would say still very range bound. And this is just, on the basis of the US isn't cutting their rates yet, and neither is the Aussie. There's not enough information to know which side of the equation here. It's just trading between roughly 66 and 65. Which side of the equation is going to cut first? And the market doesn't know. That's why it's staying in that kind of 120 pip band that it's in. Until we have, until we get one side of the equation from any of these large economies actually cut, we could stay, fundamentally range bound. The euro dollar at the moment, if I just go to the day chart, I generally tend to think we're maybe going to break below support here. But if the market doesn't believe that the Eurozone is going to cut interest rates before the US, we could just hold on support here, move back up the range. And we could just have quite a range-bound environment on all these major pairs. All right, so we'll have to wait and see what the Eurozone interest rates statement from the interest rate, delivery today. What's the rhetoric from the central bank? Are we kind of getting a leaning towards we might get a cut soon? If that's the leaning today, then we may well break through support, and we may be seeing, a solid decline of the euro dollar through the year, especially if the US dollar remains strong. And, maybe the market's shifting to the idea that we're not going to get a cut. So it'd be great to give you a straightforward answer, but I don't know what a central bank's going to do. It seems that, the information that comes from the Federal Reserve at the moment changes from one week to the next. So that's why we are seemingly having quite a whipsawing market, moving up and then down. So I think once we get a central bank to cut, we may see then, a clear shift. Like the euro yen, if the euro side of the equation here starts to cut, this euro yen's at very high levels. From a historical price point, I've been saying this for the majority of the yen pairs. Go to the monthly chart here, squash it in. We're at historical levels of high prices for the euro yen. This is where we were in the GFC. So if the Eurozone starts to cut before the US, and the Bank of Japan is starting to see inflation, and they're wanting to increase their interest rates for the, more than they did in the last month, which was like 0.1%, I think it was, then we could see a substantial shift to the euro yen to the downside, just because the fundamental picks are starting to shift, but we haven't quite had the shift. So, all I can see here on the euro yen is at very high levels, where you can, when we were there back in 97, we sold down. Back in 08, sold down. So we'll have to wait and see. All right, Harry, I don't know if I really helped you there. It's very difficult until we get an economy that actually cuts. like the US at the moment. They're saying they said last month that they were going to cut in June, but now it's looking like they won't. It becomes very difficult. All right, I'll leave that at that. Okay, everybody. Just be very, very aware of the 10:15, maybe to 11:15 window tonight for the Eurozone news and the US PPI inflation news. The ECB press conference at 10:45. It's going to be highly volatile then. Once that settles down, maybe you can see a level that you like to trade up or down from. Other than that, I will be with you again next week on Tuesday for more analysis. So if you want to join me, just head over to the webinar page and register your interest. Other than that, stay safe and don't have the fear of missing out. Wait for the setup that you're looking for. Ari, what are you asking me now? Yeah, it's very difficult, trying to glean from the US when there's other people from the Federal Reserve giving their 2 minutes worth, and you get a different flavor. But I just watch what price is doing. A lot of the pairs at the moment are limit range bound. Maybe a lot of the pairs to the US dollar are just leaning to the downside, but with maybe severe rallies to the upside when the news keeps shifting. So we might see a lot of large swings. There's just a general slight downtrend, I think, to the pairs to the US dollar at the moment. All right, don't get, the thing is, don't have the fear of missing out and getting caught at the bottom because you see a large move and you don't want to miss out. Wait for the next rally. All right, I'll finish it there. Thanks, everybody. Have a great rest of the week and I look forward to seeing you next week.